Hello everybody. So today I want to do a comparison video where I'm going to talk about both Oddity and Hims. And Oddity is actually a makeup brand that you may better know under the name of Makiage. This is an example of one of the products I'll show in a second that they launched recently. So let me go back to the beginning of this video. So, okay. Why do I want to compare these two stocks? Well, I want to compare these two stocks because I find them very similar in many ways. First of all, Hims and Oddity, through their brand Makiage and Spoiled Child, have a similar direct-to-consumer DTC strategy. And if you were a little funny and facetious, you would say, oh, well, the main way they sell stuff is by promoting it on Instagram. Right, that's one of the leading channels where these companies acquire customers. But I would just say they're just simply 21st century companies that advertise heavily online, whether it's Instagram, YouTube, whatever website people like, TikTok, you name it. They use those channels as acquisition channels to create the new brands, these new brands of the 21st century. In the 20th century, what made your brand was your ability to get shelf space, your ability to get a TV advertisement right before the evening news. That has changed. Today, what makes your brand is your ability to advertise on platforms like Google, like Instagram, like TikTok, like Twitter. And these companies do that very well, very heavily, and they acquire customers like that. But that is not the only similarity. So of course, Hims specializes in preventative health, minor health issues that need fixing through a small pill, inexpensive pill. The average Hims subscription is $54 a month, and they have subscription in all of these different places, from acne to anxiety to insulin resistance to birth control to STDs, cardiovascular health, ED. All of these are different products within the brands, right? And sometimes they have their own brands or like minor brands. You know, for example, they created this ED pill called Hard Mints, which is just a mint, which is like kind of branding within the umbrella of Hims. They have a different brand. In many ways, you could say Hims has two brands, Hims and hers. You could say that, but they also have other forms of branding within. And the same is true for Makiage. So Makiage right now, they have two brands, but they bundle a lot of their tech within the company Makiage. Spoiled Child, according to the conference call, is going to be $1 billion in sales within the next few years. This brand apparently is doing very well, and the company is working on more brands, brand 3 and brand 4. We'll get to that at the end of the video. But that's the same for Hims. Hims is working on more products. We're working, for example, on a testosterone product, on a menopause product, on a diabetes. Think about that. Think about if they start to tackle diabetes, how big that market could be. They're working on that, right? And the same is true in the beauty space. The makeup industry, obviously, very profitable industry. Pure margin, recurring product, and they are working on more brands. Just like you have entire pharmacies dedicated to selling the drug, you have entire beauty stores like Ulta, Sephora. I mean, essentially half a department store. Walk into a department store, half of it is cosmetics, right? So, very high demand, high need industries, preventative health on the one hand, beauty on the other hand. Arguably, health is bigger than beauty, but beauty is also a big industry, right? Women have been putting makeup on since the Egyptians. That's how long and how old this industry is. So if you're into the Lindy effect, makeup has been around for 3,000 to 4,000 years. It's likely going to keep being around for another 3,000 to 4,000 years, right? So that's kind of the way I think about it. So Hims, they both have disruption of their own, right? Hims disrupts the doctor's office by bundling the price of a doctor visit with the drug. That's a business model innovation. And Hims disrupts also the pharmacy business by offering a product which I often call cheaper than copays, but that's provided that if you could have a clear pricing at a pharmacy. You often don't have a clear pricing at a pharmacy. So Hims disrupts the pharmacy just by having clear pricing in a way. That's the way I view Hims. Oddity disrupts in a very different way. Of course, beauty today is mostly sold, promoted, celebrated on the internet. This is the internet. All of the clickbait that we're all victims of. That's because of the beauty trend expressed online on the internet, back in the analog world, back in the face-to-face day. That quote-unquote clickbait or iBait might have been from someone buying a beauty product at a Dillard's. Today it's from a woman buying a beauty product online. That's kind of how it works, right? And they disrupt that market, of course, by having the store online and selling the product online. Point number one. How else do they disrupt? Well, they disrupt by using AI for skin matching technology. They call it color matching technology, which is, of course, if you know anything about makeup, is the key to selling any makeup. And well, the old brands have like a number system and a palette system, and it's always tough for a woman to find the right color and to find the right color and the right foundation. Oddity uses AI to do that, and they get better and better and better at their skin matching technology, and you create a one-to-one product, a customized cosmetics for a unique skin, and we all have different skin tones. The same is true for what Hims is doing with health, a customized prescription and not an off-the-shelf prescription, right? Maybe you don't need 500 milligram metformin. Maybe you only need 265 milligram metformins because you are this one weight. Yet, no chance. They don't do that pill for you, so if the doctor tells you got to break the pill in half, right? Or something like that. So that's customization, both of them big trends in marketing, one-to-one, one product, one person. Segmentation is dead. We don't really segment people, put them into buckets anymore. The buckets is mostly dead. It's like one-to-one now. With AI, we can do that. And of course, what's great of both of them is they have a recurring revenue business model. In fact, Hims, of course, it's a subscription, and you get the subscription, and it renews every month. Well, Oddity is not always every month, but they have a subscription for their makeup products. And of course, I mean, if it is to be believed, one of the criticism of both companies is, oh, I don't know how to cancel. Oh, I'm having a hard time to cancel. If you go read if you specifically look out for negative comments about Hims, one of the things you'll find is, oh, I didn't cancel. Oh, you sent me the product, I didn't want it anymore. Well, oddly enough, two companies that have nothing to do together, if you seek out specifically negative comments for Makiage, that's the same criticism. Oh, I didn't know how to cancel. So I'm really wondering if people just forget to cancel and they blame it on the company. I find it strange that both companies would come into problems with that. Anyways, I don't dig too much into that. They are subscriptions. Subscriptions are annoying. That's just the nature of it is. And sometimes customers forget to cancel. That's it. It's no different from canceling your AT&T internet. Have you tried canceling AT&T internet? Good luck. It takes a while. So anyways, and the main difference, and of course I think it will reflect in the valuation, is that on the one hand, Hims has a greater barrier to entry, right? Because it's regulated. And so you need to have those providers, those MDs, NPs, those providers that are licensed in your state, and you need to get them on the platform. It's a two-sided platform in many ways, and they need those providers to see customers, and it's the providers who are sovereign, right? Those providers decide whether the customer is eligible for the ED drug or not, because that's how it works with health. So it's highly regulated. That weeds out a little bit of a competition, but the upside is that Hims is a more essential product, I would argue. I mean, I may be wrong, I don't know, but I would argue Hims is a more essential product than a beauty product. But that's not to say that beauty products are not essential. They're a cornerstone of the world today, of course, but arguably they're a little less essential, I would argue. But the big advantage of being in the beauty space is that you're not regulated, or you're way less regulated. There's a little bit of regulation, like this is not, what is it, Queen Mary the First of England, who died of lead poisoning, right? You can't really put lead in your product anymore. So there's regulation from that standpoint, but it's still way less regulated than say the health sector, and perhaps understandably so. So you see the similarities between those two companies. Let me move on to the guidance. So I kind of like copied the full year 2024 guidance so that it gives us a clear comparison. And I'm not going to project what the sales are going to be over the next 12 months. I'm just using the number, and I'm taking the valuation as of today, mid-September. I'm taking that valuation, comparing it to the numbers. So noteworthy, Hims has exhibited year-over-year growth, or will have exhibited guided year-over-year growth of about 40% compared to the last year, FY 2023. On the other hand, FY 2024, I calculated it for you because it was not in the guidance PDF. Oddity will have shown 26% of year-over-year growth. The gross margin at Oddity is 71%. At Hims, it is between 80 and 85%, depending on which quarter you look. And the adjusted EBITDA is quite similar, 120 to 135 million for Hims, and of course 145 million, let's call it, for Oddity. So somewhat similar. Keep in mind, in my view, adjusted EBITDA is the best proxy we have for long-term cash flow, for the general economic profitability of a business. That's why I like EBITDA a lot. I know a lot of people dislike EBITDA. It's the way of the world. EBITDA makes it much easier to communicate. I like EBITDA personally. Anyways, what is the valuation on an EBITDA basis? Enterprise value over 2024 adjusted EBITDA is 23x for Hims, 12x for Oddity. Oddity seems cheap. Why is Hims more expensive? Well, there's many reasons. One of them is it's US based, and of course US equities get valued a little more. Hims is higher growth a little bit, right? Higher gross margin is a more essential product. That would be the reasons why it's a little more expensive, but there's also a greater regulatory risk. And as I get reminded every time in the comment section, what's the big risk for Hims? It is that the regulator comes out and says you can't have e-prescriptions anymore. You can't have digital prescriptions. I don't think it's going to happen, right? We live in the modern world, but if it were to happen, it would be a 1-0 binary type of event where the company would lose its entire advantage, right? So hopefully that doesn't happen. I don't think it would happen. There's very little way to me. Another point I want to point out, another thing I want to point out here: both companies see themselves as cheap. They both have share buybacks in place. Hims has a little shy. It's a shy share buyback of 50 million. Oddity a little bolder with a share buyback of 150 million authorized. So Oddity thinks it's even cheaper than Hims thinks it's cheap. They're both cheap. They're both very cheap. Let me show you in my valuation spreadsheet how eerily similar valuation for both these companies are. I'm at a 0.075 for Oddity, and I'm at 0.068 for Hims. So they're both super cheap. The rule of 40 is well exceeded by both of these companies. Hims wins on both, though. On both the rule of 40 and EV over GP over RG. It wins on both by a hair, not a lot. But Hims is technically cheaper on the metric that I care the most about, which is enterprise value over gross profit over revenue growth. As a reminder, I use gross profit because I consider things like investing in marketing, as I just said in that sentence, I consider investing in marketing to be an investment. And if I consider it to be an investment, then it's not a cost. Then it's just used to make the business grow faster. So that's why I use gross profit much more than I use EBITDA. If you remember the early days of the channel, I even only used gross profit. I added recently EBITDA. EBITDA is a good way to know whether a company is losing too much money, and it may take a few years for that company to go bankrupt, right? You don't want adjusted EBITDA to be negative, but as long as it's slightly positive or even a little negative, but the company has a lot of cash, you're most likely fine. At least that's my view. So I own both stocks, as you probably know. Odd is a smaller position for me compared to Hims. Odd is cheaper. I find it too cheap, and well, Hims has been cheap lately, so I've been adding to Hims. But if Hims shoots back up above 20, I'm gonna add more to my Oddity position. What could explain the valuation difference? Well, I think one of the things that explains the valuation difference is that while Hims is clearly telling us what they're gonna develop next, right? Like we know they're gonna have a PTSD drug, we know they're gonna have rosacea, eczema, we know they're gonna do menopause, we know they're gonna do diabetes, right? Hims tells us what they're gonna do next. Look what Oddity does. Oddity doesn't tell us. It tells us brand free, brand 4. So we don't really know what Oddity is going to do next. And I think that is the reason why the stock is trading a little lower. It's tougher for the market to evaluate what Oddity will do next. But what do we know about the two brands, Spoiled Child and Il Makiage? Il Makiage is specialized in color cosmetics. As I told you, you scan your face, the software measures your color tone, and then it makes makeup that matches your color tone. And Spoiled Child is their product in skin and hair. Skin and hair. So you can see some of the similarities with Hims here, because Hims has a dermatology offering. And it's worth mentioning that there's cross-pollination between the two brands in this. If you see, Il Makiage just launched a skin product from the learnings that they got from Spoiled Child. So this is an agile company. Whatever they learned in the Spoiled Child, they also make a Il Makiage version of it, and it's the same underlying tech for it. And the question is, what is brand 3 and brand 4 going to be? That's the uncertainty of the market. Brand 3 and brand 4, they will be launched in the second half of 2025, which is perfect for me because I am in no hurry to know. I like to have the stock cheap, but as a long-term investor, that's your advantage, right? And what are they working on? Well, they are working for a medical-grade skin and body brand that will address a range of issues, including acne, eczema, hyperpigmentation, and other large customer pain point. And brand 4 should be closely related to that. And both of these brands are launching at the same time in 2025. Well, doesn't that look eerily similar to rosacea and eczema that Hims is planning to launch in dermatology? There is some overlap between these two companies. And right now, they're both cheap. And I like Oddity. I like Hims. I prefer Hims, obviously, if the number of videos I've put on the channel out is an indication. But I think Oddity is a nice addition to the portfolio, and I'm happy to own Oddity at these levels. So I'll keep covering both stocks, as you know, Hims for sure, but Oddity, I'll keep covering a little more Oddity, especially looking forward to their next quarterly results, and looking forward to them launching these new brands. I find both of these companies quite interesting. In the end, this is not investment advice. This is no financial advice. This is just entertainment only. Please like, please subscribe, please comment, follow me on X if you can. I appreciate that. Thank you for watching and have a wonderful day.